Hello, welcome to Growing a Business with an Evolving Regulatory Environment, within an evolving regulatory environment. I'm here today with Oliver Tonkin, who is co-founder and general counsel at BCB. Hi, Oliver.
Hi. Hello. How's it going?
Very well, thank you. Thank you so much for coming along today. Perhaps why don't we start with you giving a brief overview of your background and the great work that you and your colleagues are doing at BCB.
Sure. So, my background is a legal background. I'm a 21-year qualified solicitor, English solicitor. My background is mainly kind of corporate commercial regulatory work, both in private practice in a city law firm. I've worked in financial services businesses really since then. Whether it's M&A or investment advisory, that's really my kind of background. I had the pleasure of setting up BCB with my co-founder Oliver von Lansberg-Sardi in 2017. We knew each other from business school 15 years ago, so that was how we sort of knew, and we stayed in touch. We realized that we had a shared interest in kind of crypto and all things blockchain in 2017, and thought let's see what we can do in this space. So that was the genesis of it. We started as a brokerage, sort of a vanilla brokerage, buying and selling crypto for many kind of high net worth customers. We've never really touched retail on the crypto side at all. There's other people who do that better than us. We migrated into the more kind of institutional corporate space in 2018. Rebranded as BCB, and developed the business from there. So where we are today, we still do the kind of crypto brokerage. Again, it's institutional corporate brokerage. But our other business as part of that offering is providing the kind of payment rails for firms to kind of get in and out of those markets, fiat in, fiat out, in a kind of regulated environments. And we have a payment institution license in the UK, and we also operate out of Switzerland doing something similar. So that's what the business looks like today, and it's going well at the moment.
That's terrific to hear. Thank you so much for that, Oliver. So perhaps why don't we start with your recent funding round? Firstly, congratulations.
Yes. Thank you.
Why don't you tell us a little bit about that? Who were the investors, and what do you see as the short to medium term strategy in regards to these additional funds that you provide?
Yeah. So we've always operated on the basis that we wanted to be profitable. There's other businesses that raise a bunch of money, burn a bunch of money, and see kind of hope it works. And that's avoiding it. But our view was always very much we wanted to try and build sustainably, build a critical mass, grow the top line and reinvest that money, which has worked very well. But obviously, if one wants to then take the next level up, that kind of step change up, rather than a incremental growth, we wanted to find some investors to support that. So we were lucky enough to raise several £million from a group of venture capital investors in February, both US and European. So the round was led by Blockchain Ventures and North Island Ventures, both very respected US VCs, along with Pantera and a firm called L1, which is a Swiss Luxembourg based blockchain investor, and Alex Pack as well, who's a very well known US blockchain investor. So we've been speaking to them for a while last year, and they like what they saw, like the story, like what we were doing, and we were very lucky enough to get them to sign on the dotted line in February and release the funds. So we're extremely happy with that, with that milestone in the business.
I note that you've released a couple of new offerings in the last 6 months. Firstly, Blink, and also recently a treasury solution. Perhaps if you could talk a little bit about these.
Sure. So I should add. So I didn't talk about the reason for the funding. It's a mixture of growth capital, and what we wanted to do was increase the balance sheet in terms of our regulatory capital requirements, both in the UK and Switzerland. That's the main driver for the investment round. I should have mentioned that. But yeah, in terms of Blink, so I mean, Blink is an extension of our payment rail business, and it's it effectively allows customers that we've onboarded onto our platform to transfer funds to each other on our platform so instantaneously. So instead of having to press the button on a bank transfer and kind of wait an hour or a day or whatever, it could just happen straight away. So it's an instantaneous transfer. So if you're a counterparty and you're looking to trade with one of the exchanges on our platform, you can now do it immediately and with a seamless flow of funds. So that's been just so far. I mean everyone that's on thinks it's great. We're looking to roll it out into a wider footprint and some other currencies too. So it's mainly currently a UK GBP, Euro, and Swiss franc, and we're adding some new currencies over the next few weeks and months, and bringing other people on board. So that so far has been a successful offering, and it's mirroring some of the kind of USD based instant settlements offerings that are available in the US, and we're trying to mirror that in Europe and elsewhere in the world in terms of other currencies. So that's Blink. In terms of the treasury, I mean that's a very recent product that we've launched, and it's really in response to the increasing visibility of cryptocurrencies, Bitcoin, other crypto assets. Conscious that there are some trailblazers in this space, mainly in the US, that are looking to diversify out of fiat, out of USD and other currencies. There are always these inflation concerns. A lot of currencies, Swiss franc and euro, obviously are negative yielding at the moment in terms of negative interest rates, and so there are firms that have got surplus capital on their balance sheets, and they're looking for a home for that, and maybe they want to invest in Bitcoin or possibly dip their toe into some of the DeFi markets that are out there to try and increase the yield on the balances that they have. And that's BCB Treasury is a product designed to cater for those kind of firms that want to take that step.
Yeah, it's. I think the timing of releasing this service for treasuries is perfect. We've seen all the stories, whether it be the Teslas and the PayPal's offering services. And if you just go to bitcointreasuries.com, you can see the top three names: MicroStrategy, Tesla, and Square. Have billions.
Those are the three.
There's the three that are sort of changing the viewpoint. And you could see a world where all listed corporate treasurers will want to diversify their portfolio and hold at least a small percentage of alternative digital assets as a liquid asset class.
For sure. I mean, and it's whether it's corporates, whether it's endowments, family offices. I mean everyone. I mean it's gone from being a crazy idea, frankly, that the people 2 or 3 years ago people would have laughed at you. You said, put 10% of your surplus capital into Bitcoin, but I mean now, there is certainly we've seen over the last few months an increasing interest in the space from firms and businesses that even a year ago would not have entertained the notion.
Mm-hmm. I totally agree. I still think there's some issues to solve, such as accounting standards and perhaps to taxation, where there's a little bit of friction there.
Absolutely, yeah.
But now that leads us nicely into the regulatory landscape. So we know that BCB Group is established here in the UK, and also you mentioned Switzerland. I understand that you're regulated by the FCA in the UK as a payment services provider under the PSR, the Payment Services Regulator.
Yep, correct.
And also you're in the temporary regime for the money laundering regime, which is a rollout from the EU AMLD5. Why don't you talk a little bit about the sort of dual operation and tell me a bit about what the regime is like in Switzerland and how it perhaps compares to the FCA in the UK?
Okay. Well, fundamentally, the rules around know your customer, know your transaction, are they are the same. The Swiss. We're regulated by what's called the VQF in Switzerland, which is one of the self-regulatory bodies that FINMA have given authority to regulate firms under that umbrella. And that's the financial intermediary license, which is the one we've got. It's effectively been extended to include crypto trading and settlement within that license. So there are a number of firms now that use the SRO financial intermediary regime to do what we do in Switzerland. They were very early. Switzerland was probably the earliest onshore jurisdiction, for want of a better word, that embraced some kind of taxonomy, and they were very clear about this is if you were doing this, it's okay, but this is what you need to have. And their rules are robust, for sure. But it's what there is in Switzerland is a very clear regulatory certainty that if you're doing this in this business, you need a license. It's okay, but you need a license, and these are the rules that you have to follow. And I think that's what Switzerland's got over probably maybe the UK right now, which is some degree of certainty over the regime. So if you're doing exchange, if you're doing custody, if you're doing security token offerings, whatever you like. There's a very clear regime, for that activity. And so, we've got, we've had that license since 2018, and it's been a good one for us to have. In terms of the UK, it's a slightly, look, the regime's there, right? The MLD5 changes to the AML regs, which were made January last year, are pretty clear. If you're doing this business, you need to be, you need to have a money laundering supervising license by the FCA, and you've got to, and we know all about there was a priority period for people to to apply. That's obviously been extended for for a number of reasons. But at least there's certainty over what you need. I think that the challenge in this country is obviously being that there's been more firms applying than probably the FCA thought, and they've set the bar very high. And this is just my experience. I know a number of the firms that that are doing this activity in the UK. I don't really know any rogues. Maybe that's just because we set the bar high ourselves and tons of people that we deal with. But everyone's trying to do the right thing. I think what has been difficult for some firms is, a lot of the people that have set these things up are technologists rather than regulatory compliance people. I've got a background in the space, so I'm kind of pretty comfortable operating in it. But some firms want to do it and want to do the right thing. I think they've struggled with some of the expectations of the FCA on. The application process was not an easy one to do it. It was onerous, and I know what I'm doing. If you don't know what you're doing, you don't really understand some of the nuances. It's been pretty difficult, and I think there's still 100 and something firms on this temporary register. We're now at the end of March. June's the long stop date. There isn't really an awful lot. There isn't really an awful lot of feedback in terms of what's going to happen come the end of June. And I think that it's not me to tell the FCA what to do. I'm sure they're internally discussing it. But I think it would be useful to have some kind of update as to where we are on that 150 odd people that are that are waiting, because I mean some firms have been in the waiting room for 9 months, a year, since they filed their application. We were lucky. I mean, we've had some Q&A, and I mean, we've not had much for the last 3 or 4 months. So, yeah, I mean, I think it would be useful to get some feedback, because, again, this is just my opinion. I think this is an increasingly, it's an important area, in the market, and it would be a shame for lots of reasons if people were put off operating here. At the end of the day, you can operate somewhere else. You don't have to do it in the UK. You can go, to another jurisdiction, and once the business is gone, it's gone. It ain't coming back. So there's issues around just being open for business, being a fintech hub, employment, lots of things that I would, I think some degree of more overt engagement in what's going on, I think would be really useful. And I'm sure that's happening. I'm sure the FCA understand those issues, and I think it would be great if they could come out sooner rather than later and just give an update as to what's going on. If that's an extension, I don't know, or what. But I mean, I think something would be useful. I mean, I saw your letter that you wrote to Rishi Sunak recently, and I didn't disagree with anything in that letter.
Thank you. Yeah, there's a couple of points I'd like to touch on, and we'll come to the money laundering regime in a moment, and the work the community is trying to do to improve the situation. But it's interesting you mentioned, going back to the Swiss regulator, FINMA, and the SRO, self-regulatory organisations and authorities that they set up there. And we know from the work that we do with the FCA here in the UK that they do not perceive that an SRO is relevant for the crypto asset industry. So it's great to see the Swiss regulators being proactive there, because it's been sort of shut down in the discussions we've had in the UK. We even saw the FCA talk about that. Yeah. Crypto asset promotions consultation was closed at the end of last year. So yeah, regarding the money laundering license, yeah, folks will be aware that we at CryptoUK wrote an open letter to the Chancellor in the UK to really ask for a light to be shone on the issues that we're seeing. And as you rightly said, it's been nearly a year and a half since this application has been open, and only 4 out of what we are hearing, 200 applications received, have been approved in that period of time. So what we would like is some sort of changes to perhaps the high bar that the FCA are having in place, which we've heard from many members, that this is being treated more like a conduct regime than an actual application regime. We also speak with Treasury on a regular basis. This is Her Majesty's Treasury. We had a roundtable with them last week and brought up the particular issues that we're experiencing at the FCA. And also, to sort of tie into the great work that you do at BCB, is banking relationships in the UK. We again wanted to shine a light on the problem that crypto asset businesses in the UK have in obtaining a license. And it's all very well for the British government to come out in the recent budget and the Khalifa FinTech report and talk positively about the UK being the FinTech centre, as you mentioned. And also to call out crypto assets. We have a great opportunity because of our historical significance in the City of London as a financial capital. Also, we have the technology, we have good access to resource, whether it be capital or expertise or good rule of law, and so on and so forth. There needs to be some work done on the ground, and that's what we're seeing with the regulator right now. So if I may sort of turn that into a question, what's your view, Ollie, in regards to what you're seeing in the community for the next year or two with regards to improvements in regulation, especially around banking? Because if it wasn't for you, lots of crypto businesses would not be able to function because they have no access to payment services. Do you think it'll change once the money laundering regime, let's assume come the end of the summer that a whole raft of applications are approved and everybody is fine and we've forgotten about it? Do you think banks will have a different risk appetite for crypto?
Well, selfishly, I would say I hope not, because it would it would be bad for us. But I've been asked that question before, before the regime started, and I honestly I don't know. I mean, it might. I think the problem, and this is actually a wider problem than just blockchain. I mean, the reality is that you know, it's very hard to make money if you're a bank with current interest rates being where they are. It's very hard to make money, and so yeah, any segment that is expensive to supervise, to look after, you know, to consider, is basically unprofitable. That's the reality. So unless you're a very, very vanilla business, or a customer, and a bank can make some kind of money off deposits that you hold or fee or whatever, it's hard for a bank to make money. You know, banks want to put customers into very narrow categories of business, make them at least marginally profitable. And I think they perceive crypto, it's partly AML risk, but it's the wider thing. There's lots of, there is a problem with fraud in the crypto market as well. Let's be honest. I mean, fraudsters are using exchanges to move money away quickly. So I think there's always going to be an enhanced compliance cost, to the space. That is the reality, and that's going to be the case as far as I can see, forever. So it's for banks to really, banks are taking the view, okay, a business has got an AML supervised license. So what? It's still going to be expensive, for us to service this market. There's still that residual risk that they could be involved in a sanctions bust or money to Iran or whatever. And I think they take the view, rightly or wrongly, the marginal sort of revenue accrual to them versus the downside doesn't add up. That's the reality.
Mm-hmm. No, that makes perfect sense. Sorry,
maybe. Yeah, sorry, go on.
I was just going to roll into that. The letter that the FCA sent back in the summer of 2018 to all of the UK bank CEOs.
I remember that, yeah.
First paragraph basically says, and I brought it up here, as evidence emerges of the scope of crypto assets to be used for criminal purposes, I am writing regarding good practice for how banks handle the financial crime risk posed by these products. That's the first paragraph. So guess what? I'm the CEO of HSBC, and I read this and I think the risks are just too high to take the business.
But, and just on that, I remember at the time I was frustrated a little bit because not a month before that letter was issued, the Sandbox team put their report out about blockchain innovation, and they had a report at the banks for saying you're basically killing this market because you're not giving them banking services. So on the one hand, the blockchain team was saying, "Come on, banks, sort yourself out." And then not a month later, the FCA, another department, I guess, wrote to banks warning them that this was a risky space. I mean, that kind of thing, frankly, is poor because I mean, you've got visions of the same regulator with a very different view. So I mean, it doesn't really help. And I mean that's not really changed. I mean that crypto equals money laundering. In people's minds, it hasn't really changed. And I mean, you look at elliptics. I mean, I don't know if you read the elliptic and the chain analysis, reports. Yeah. They reckon that like 1% of on-chain activity in Bitcoins, some got some link to money laundering or illicit activity. That's not a lot. And even that's confined to the sort of high risk exchanges. So that's not a lot. And I mean, I bet you that fiat flows in the general economy, it's more than 1%. So it's partly perception, and it's scary, but it's just because banks are being squeezed, and it's hard to make money out of customers. I think that it's economics as much as it is regulation.
My personal fear is, and you touched on it before, we obviously have cryptos global in nature, and lots of the folks that we talk to in the community can easily, because they're dynamic and adaptable, can relocate in another jurisdiction and still sell their services to the UK customers. And
I think some might do.
That's the catch-22 because the FCA have no jurisdiction.
I think that ship might have sailed, frankly. I think it may happen.
And the consumer harms are still going to happen. So it's sort of a catch-22 situation, what we're seeing. And I also wanted to touch on another jurisdiction, USA. So we're 3 years since that letter in summer 2018, and we're no further forward, as you mentioned. But other jurisdictions, so in the US, we see the Silvergates, the signature banks, which are crypto-friendly, plus even the likes of the big Wall Street names, JP Morgan and Bank of America, banks and crypto exchanges now. We're falling behind here in the UK. We need some government intervention to help banks address what is, as you say, the risk perception and the P&L, the incremental costs do not equal the downside risk.
Yeah, I agree. I mean, we are. I mean, yeah, to be honest with you, across Europe, you can count the number of banks that support the space on the fingers of one hand.
Mm-hmm.
Literally. So and there's a lot of banks out there, and a very, very, very small number indeed are overtly friendly to the space. There really aren't that many at all.
No. All right, well, we can't have a discussion about regulation without bringing up the Financial Action Task Force. FATAC recently released some additional guidance and a live public consultation on risk-based approach to virtual assets and virtual asset service providers. I'll just highlight a couple of the key changes, and then we can sort of get into your view, Ollie, as to regards how you think that will impact the community and your clients. So decentralized exchanges have previously been excluded as VASPs, with the definition that a DApp, decentralized app or software program, is not a VASP in the FATF standard and definitions, because they do not apply to software, they're technology agnostic. However, we've seen somewhat of an about turn here. Now, the new guidance states entities involved in the DApp may be VASPs. The owner, the operator, will likely fall into scope conducting the exchange or transfer of virtual assets as a business on behalf of a customer, even if the community plays a role. So effectively, they've just turned around and said to all competent authorities, governments across the world, that if you're decentralized, just still in scope. There's a number of other things in there as well regarding non-hosted wallets and NFTs and stablecoins, but that's sort of the big one. Can I ask you, have you had any discussions with colleagues and other folks in your community as to the view on this and how it will play out in time?
I mean, in the context of we don't do a lot of work with decentralized exchanges per se. I mean, all our work is with real centralized exchanges that everyone would have kind of heard of, or OTC desks. I mean, in terms of, I think the biggest issue here actually is in the true DeFi space. I'm not talking about platforms that do crypto lending or borrowing per se. I mean like true decentralized finance platforms that are smart contract enabled, protocols, whatever. There's a lot of money moving about those. I mean, billions of dollars, and some very, very fat yields being paid and being charged. I think that's a really interesting space in terms of the kind of AML space. So I mean, once you've got your coin from an exchange or whatever, you can basically stick it onto one of these platforms, earn a very good yield, and it's really completely out of scope or scrutiny of anyone, whether it's a corporate or a regulator. So I can understand the slight nervousness and the slight issues that that arise there. But in terms of how you regulate them from an AML point of perspective, it's actually really difficult, because I mean, yes, there are businesses that set these things up. They basically just set them up and just press the button and they're live. And once they're live, and the actual intermediation of the launching kind of sponsor, is zero. Again, it's easy to say, these entities are now VASPs that launch these decentralized products. But I mean, in reality, I mean, they're not, because all they're doing is setting up a protocol and saying, guys, if you want to use it, there you go. And I mean, yes, they're doing the tech and they're kind of monitoring the plumbing, if you like, of the protocols, but they're not onboarding anyone, and they're not really set up to do that. So I don't have an answer to what's going to happen, but I think translating that kind of concept to actual action is really hard, because also I mean, who's where are they? I mean, who's going to regulate them? I mean, because they're being used by anyone and everyone. It's really, I don't have an answer to that question, but I think it'll be very difficult to, without killing the whole space, very difficult to actually effectively enforce that kind of pronouncement. I think the answer is to make sure that if someone's coming from fiat into stablecoin, let's say, to access DeFi, it's to really make sure that those gateways are properly enforced. And I think there's that framework hopefully exists now, and it'll be further strengthened. But that's the answer. But I think to expect a sponsor of a DeFi product to become the VASP and become the policeman of the protocol is right now not realistic. Is my honest view. But I mean, I could be wrong. Let's see.
Well, my personal view is bang in line with that. Right now, it's hard enough for industry, and industry has done a lot of work already regarding the travel rule for centralized exchanges. There is no solution. There are some product solutions, technical solutions out there, but they don't address everything. There's interoperability issues. There's the Sunrise problem, which is one jurisdiction rolls it out, which we've seen in Switzerland and Singapore. Then do these VASP not send to non-compliant jurisdictions such as the UK and the US? The US is doing its own thing. Is that going to work with Asia and Europe? And so to roll into that, the decentralized finance world, which at this point in time is some 45 billion in total value locked in. That was 20 billion at the beginning of the year and $500 million at the beginning of 2020. So you graph this, the rate of growth is exponential. So it would be systematic and significant in a short to medium period of time in the future. However, these problems are super difficult to solve. So we hope that the supranationals tread carefully. And we talk regularly with HM Treasury and their illicit finance team regarding how the industry is solving for this. And we are that bridge between the community and the policymakers to ensure that we do get some sort of balanced and proportionate regulation around this before, as you mentioned, Ollie, it can really kill off innovation here in the UK.
Well, it can kill off innovation, and it effectively drives it underground. I mean, that's always the argument people make about regulation. Drives things underground. Yeah, it actually really would, because I mean, these things are not going away. And so I mean either you embrace it and try and shape the direction of travel in a way that achieves objectives around whether it's tax evasion or money laundering or whatever, or you sort of pretend that you can somehow kill it, and all you do is create more problems.
Yeah, the unintended consequences is something that policymakers need to be super aware of. All right, well, thank you so much, Ollie. That's been a fantastic discussion. Thank you ever so much. If anybody wants to reach out to you or anyone at BCB, how do they go about doing this?
So they can contact info@bcbgroup.io, which is a manned channel for business inquiries or anything else. And I'm on LinkedIn. Ollie's on LinkedIn. So reach out.
Thank you very much. Take care. Bye-bye.
Great stuff. Cheers. Bye.